Hello friends, I am Ajay Tyagi. The philosophy of the fund is to invest into high quality companies that generate strong return on capital employed and also strong cash flows, and this becomes the source for economic value creation year after year. Within this set of strong ROC and strong cash flow companies, we try to look for companies that have a secular growth over the medium to long term. Such companies, when wedded with high ROCE companies, become the source of long-term wealth creation because of the compounding of economic value that is being generated year after year. The fund also follows bottom-up philosophy and tries to look for companies across various industries and sectors that fit into the criteria that I just mentioned above. Let us now talk about the sectors where we are bullish. To begin with, the banking sector fund, where the fund has its maximum weightage parked. Within the banking sector, we are bullish on private sector banks and extremely bearish on the PSU banks. We feel that the market share gain which the private sector banks have shown over the last decade should carry into the upcoming decade as well. In fact, because of the poor capital conditions of the public sector banks and also the fact that many of them will perhaps have to go through merger related issues, it becomes that much easier for private sector banks to increase their market share. Also, if you would have noticed, over the last couple of years, credit growth in the economy has been extremely poor. We expect that as we go ahead and economic revival happens, the credit growth in the economy should also improve, and that should help private sector banks in particular in growing their net interest income and therefore their profitability. The pharmaceutical sector is the other sector where we are holding a bullish position and we are overweight, although it's a contrarian call. If you look at a typical pharmaceutical company in India, it derives its sales from three different markets. The first being the Indian formulations market, the second being the unregulated emerging markets across the globe, whether in Africa or Asia or even Latin America, and the third being the generics market in the regulated or developed countries like the US or Europe. If you look at the news flow from the US generics markets over the last 6 months to 1 year, there have been a lot of negative events that have unfolded. Unfortunately, companies across the pharmaceutical space in India, regardless of their sales mix from the above mentioned three geographies, have all been beaten just on account of the spate of negative news from the US generics market. The fact, however, remains that the Indian formulations market as well as the exports to unregulated emerging markets, the first two categories that I had earlier mentioned, are high growth areas where growth and profitability should continue to happen over the next 5 to 10 years. Even in the US generics market, where there has been a spate of bad news over the last 1 year on account of pricing erosion, we feel that companies which are trying to make efforts towards going up the value chain, like entry into complex generics, branded generics, and also into brands, would be able to find areas of growth and profitable growth over there. So finally, we feel that the pharmaceutical sector remains one of those sectors which has the capability to not only grow into the next 5-10 years, but also to generate high return on capital employed and generate free cash flows. And this remains the basic reason for us to remain committed and to remain bullish on this sector. Of course, because of the correction over the last 1 year, companies in this sector have only become much more attractive in terms of their valuation, and therefore we are not shying away from increasing exposure wherever the correction is overdone. Consumer sector is another sector where we are bullish. We feel that this is one of those sectors which has long-term drivers in terms of growth, and of course in terms of profitability, cash flows and return on capital employed, this remains the best placed sector in India. In terms of growth, we feel that the improving per capita income in India, as also the under-penetration of various categories within the overall consumption basket, makes this sector attractive for long-term investors. From a very near-term perspective, we feel that a good monsoon this year on the back of a reasonably strong monsoon last year would help volumes pick up across the consumption space. From a medium to long-term perspective, we feel that the implementation of GST should be a net positive for companies across this sector, because many of the companies in the unorganized sector which compete with the listed companies in this space would find the going very difficult as and when the new regime kicks in. This will lead to a higher pricing power for companies which are in the organized space within the consumption sector. Finally, as an investment philosophy, we are maintaining exposure towards leaders within various sub-segments of the consumption sector which have shown the ability to improve their market share year after year. Now let's talk about the sectors where we hold a bearish position and therefore we are underweight. Predominantly metals and energy are the two sectors where we are holding a negative bias. The big reason for this, of course, is the fact that across these two sectors we find it difficult to find companies that have strong ROCs, strong balance sheets and strong cash flow generation. Most companies in these sectors are driven by global demand supply factors and don't have a strong secular growth outlook. In fact, the growth in this sector is highly cyclical and, like I mentioned, is dependent on global factors rather than local factors. Finally, because of the high capital expenditure that typically companies in these sectors have to entail, the balance sheet is usually stressed and cash flows are typically very weak, something which is anathema to our investment philosophy. Well, this is it for today. Thank you very much for your patient listening. Have a nice day.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.